Hello everyone, I'm Madhvi Reddy. I'm a certified financial planner. Today I'm presenting this webinar on the topic of Gold Outlook 2021 from Indian perspective. So before that, I wanted to give my introduction. I am practicing my financial planning profession since 6 years, and apart from that, I'm giving my skills and training skills and knowledge and my experience by bringing more professionals into the CFP fraternity by this institute called Madhvi Institute of Financial Services. Apart from that, my passion is to bring more financial literacy and enhance the knowledge among the people towards financial planning. For that, I am being through electronic media, print media. I'm using my YouTube channel and so many other digital platforms and electronic media, like some news channels of regional news channels, to spread the awareness on different financial services topics. So this is in short about myself. Let's get back to the webinar. So before that, I wanted to make the disclaimer. The views and the opinions expressed in this presentation are solely of mine and may not necessarily represent the views of FPSB Limited, and it makes no representations or warranties about the accuracy or suitability of the information provided in the webinar. So let's get started. So the topic name itself, the Gold Outlook of 2021 from the Indian perspective. So by this webinar, I wanted to spread this awareness and the knowledge, like how much the gold should hold as a portfolio for everyone, and in what method everyone should hold the gold in their portfolio. So this is the main objective of this webinar, to tell about this gold as an asset class. So the gold appetite. So far we know that Indians are very much have love for the gold, and being the largest importer of the gold, we have got very well established gold markets in the world, and approximately we used to import almost 800 to 900 tons per annum on an average. But right now, due to this so many reasons, that was dropped drastically, but on an average we are the largest importer of the gold. And apart from that, from Indian perspective, gold has seen more as traditional and cultural reasons. People used to hold it gold for the generations, to protect the wealth and generate long-term value. So and now it is changing, right from the urban to the rural. The attitude towards gold is changing from being a traditional way of holding, and for the cultural reasons, now people are looking at it is as an asset class. This change we are seeing, and the gold market also increasing day by day, and more people are involving themselves for holding the gold for different reasons, apart from cultural and other traditional ways. And now this slide will tell you what are the factors are currently impacting the gold prices. Gold prices we are seeing right from last 3 years. If we had seen it is being 32,000 or 33,000 for almost 3 years. Now suddenly we seen the price hikes and going towards 50,000 per 10 grams. So everyone is getting the net, and gold has got a lot of attention nowadays. Why the gold has risen so far in 2020 itself, it's almost has given 20% return, where other asset classes like equity has crashed, and real estate prices also getting crashed, and we are seeing the global interest rates are coming down drastically to the negative, and crude oil has also been crashed and got into into the negative zone, but still gold is the only asset class where we are seeing in this 2020 is the only emerging asset class which has got almost 20% return, and the price still increasing. So what exactly the gold has relation with these many things? So the relation when it comes to the dollar, so we can see as and when the strength the dollar is increasing, the gold prices are increasing. As and when the equity is having a negative correlation, like as and when the equity markets are getting slowed down or getting crashed, the gold immediately is increasing. And even the central banks, so in this kind of crisis, or maybe all central banks and global banks are keeping gold reserves in physical form. So that makes the gold is making more attention and getting into more higher and higher and breaking its own prices of this year. That main reason we are seeing, everybody knows this COVID-19. So as and when the crisis has come up, so the gold is treated as a safety bet or heaven to keep our investments, our money in this gold. So these are all different reasons that we can say why the gold prices are increasing, because of this crisis. As in when the crises are going, so people have so slowly taking their money from different asset classes and running towards the gold and keeping their money into the gold. So that we are seeing even the central banks also keeping more reserves in the gold. So these are the reasons that impacting the gold prices even now, going towards higher and higher month on month. So before that we get into more details, there is I wanted to give a clarity on the how these gold prices conversion will go on, because we always see in the newspapers or other media, like in international prices the gold is trading in some dollars, like it is now 1700, example $1700 per ounce it is trading. But when it comes to the Indian rupees, there is no clarity like how we should convert for so many. So I wanted to give a clarity, like whenever you keep reading or you keep listening that gold is trading at $1700 in dollars, so by this way I wanted to give a clarity how we can convert into Indian rupees. In this example I have taken the gold is trading at $1700, where at the time the US dollar and against rupee is trading at 76 rupees. In this case the per gold per gram is 4565 rupees per gram. So how it has come, like 1703, the ounce is equal to 28 grams 28 grams or 28.35 grams. That means 1703 is per ounce. So the number of ounce in grams is 1703 into 76 rupees is the dollar rupee. So when we convert into the rupees, that becomes $1703 dollars. When converted into Indian rupees, it becomes 1,29,428 rupees. When we divide by these ounce, which is 28.35 grams, if we divide by that, we'll get 4,565 rupees per gram. But when it comes to the 10 grams, as it trades in MCX in Indian browsers, then it will come to 45,650 rupees for 10 grams if it is trading around $1,703 per ounce. Now let's get back to this, like now everyone is talking about the gold. It might reach to 70,000, or it might reach to 52,000, or it may get back to 38,000. So let's see what would be the outlook for the gold for 2021. So so far we have already seen the prices have gone up by 20%, and it is going towards, it is trading around $1,700 in international markets and going towards $1,800. Someone is saying that by 2023 the gold market might hit $2,020 mark. So is it possible? So when we see the crisis, whenever is the crisis are happening, definitely the gold is getting into the limelight and touching the new highs. When it see the all-time high in 1980, the gold has touched $2,165, whereas we had seen in 2018 crisis it is $1,200. Later 2019 it went up to $1,548. Now it is trading around $1,700 per ounce. So we are expecting, if that still there is a lot of scope is there that it may touch $1,800 if the lockdown still continues, if the vaccine getting more delayed and the economies are more disrupted. So the gold keep on increases. So it's all depends on how better we can manage this situation and how fast we get the vaccine. As soon as we get the news of the vaccine, immediately the gold price will get back to $1,650 and $1,700 where it is right now, or it may correct another $100 if it is really that the vaccine has come. So immediately we can see it comes to $1,600. But if it is not, then there is a possibility, or it is taking more time, the vaccine has not yet come, the lockdowns are extending and the economies are not full-fledgedly working, so then it may went up to $1,800. Though this is the outlook for 2021. And now the question comes, like, why we should hold the gold in everyone's portfolio. So as far as we have seen the asset allocation, everybody does the asset allocation as a part of risk management. So the risk management, people will hold different asset classes, like something in equity, something in debt instruments, someone keep their amount, some portion into real estate, something in liquidity. So as well as everyone should have one more asset class should be added, that is called gold. So that kind of limelight has got the gold because of the crisis. The people, the way they are seeing the gold is moving whenever there is a crisis, and gold works even against the inflation. So as and when the inflation increases, the gold also increases. And there is whenever there is a liquidity, so far we are seeing due to this COVID, there are every country as imposing or pushing their liquidity into the economy, so that economy will drive more. So that liquidity is going towards the gold. So as and when there is a more liquidity in the market or in the economies, the gold price will increases. Until the equity markets are not stabilizes, the gold will increase as a safety bet. So for that reasons, we see that the crisis will keep coming. So to hedge your portfolio, to manage these crises which may come any time, so everyone should hold, apart from equity, debt and other instruments, some gold portfolio also should be there, and it should be between 10 to 15% of your proportion one should maintain in the gold. And it is very clear that now everyone should hold 10 to 15% proportion in the gold. So what are the best methods of holding the gold? So we are seeing so many modern methods are there, but previously most of the people will used to hold the gold in physical format, or either in for their consumption in the gold ornaments, or for the consumption or gold coins or something like that. But those are all does not work due to so many reasons, either for the safety reasons, or in the form of purity, or in the form of other reasons. The gold, the people who are holding in the physical form are losing their values. So it is always recommended, the people who are holding gold as an asset class, as an investment, not to hold in physical form, but to hold in paper form, either in gold bonds or in a electronic form. So let's see what are the methods are there for modern methods. Even in this lockdown also you can buy the gold, even the shops are shut of the gold, but still you can buy and sell the gold via some mobile wallets like Google Pay, Paytm. People are buying the gold, even 1,000, 5,000 rupees also you can buy the gold via these mobile wallets, and stock holding corporation also is issuing through that we can buy e-gold. And there are gold backed ETFs are there, and there are some gold funds also available, and recently the sovereign gold bonds, which are very popular nowadays. So these are all the methods which are available in the market for whom you can do it online or electronic form of holding the gold, or in e-paper. So out of this we have taken gold ETFs, and the sovereign gold bonds are the best to hold the gold in their portfolios. So how and why and what are the advantages? Let's we look into this first into the gold ETFs. The gold ETFs is as equal as you are buying the shares in the stock exchanges, either BSE or NSE. You can buy the gold through gold ETFs, which is converted into one unit where you can buy even half of gram of the gold or 1 gram of the gold you can buy through gold ETFs. There are very good ETFs are there, like Axis ETF or SBI ETF or like Kotak ETFs. There are so many good ETFs are available where you can, for that you need to have demat account, just like shares. As and when you got the money you can buy the shares. As and when you have them, you need money or you want to liquidate, you can sell the shares, sell these units as like shares. It is good traded ETFs, exchange traded funds are there, so which are very easy to buy and sell, and there is lot of transparency in the pricing, and for that what you need is the demat, and there is no exit and entry charges are there. So it is very good for the people who are looking for the liquidity and want to be in the taking the advantage of the gold price hikes. So this is the best bet to be in, to buy the gold in gold ETFs form. So next one is gold sovereign bonds, so which is more popular right now. So these are all introduced by the government of India and issued by the RBI. So these are issues are coming from October 2019 to till I think next issue is coming up in the May 11th onwards. So where the gold is available in paper form. So as and when you buy the gold, you will get a document, or it is very much easy to buy. So you can start with buying a minimum of 1 unit per gram to 4 kgs you can buy for individuals, and 20 kgs for HUFs and trusts. And it is well, you can buy either by going to the banks and the post offices by nearby you and take the application form, and as and when amount you wanted to buy, you can buy it. It is very much flexible in the form of amount you want to fix it up, because it starts with even 1 gram to till ranges to 4 kgs. And or else if you want to buy online also, all online facilities also available. If you want to buy through directly to going to the bank, or so you can buy up to 20,000 is available in the cash, and rest of them you can buy either online payment or check or DD also you can buy. So that much easy to buy the gold sovereign bond. Since it is backed by the central government, you need not to worry about the safety. But the most important, and never has been had this much of a convenience in the or interest to invest in sovereign gold bonds, that is, it is coming with the interest. So on these gold investment, example, you bought 1 lakh worth of these gold bonds, on that you will get 2.5% interest per year, that is paid directly semi-annually to your account. So far it has not done. So why the government is giving 2.5% per annum as an interest? The government has taken so many initiatives initiatives to stop the imports of the gold, because our consumption is very huge, as we are talking about 800 tons per annum. So by that we are losing so much of foreign reserves because of this gold imports. They have done so many things to stop these imports, but still people are buying the gold. So what they have done to change the attitude of the people buying the gold in physical form, government has introduced these gold sovereign bonds with 2.5% interest, so that people would love to or would like to invest in this gold sovereign bonds, at least for this 2.5% interest. Nowadays we are seeing even on savings account also you are getting only 3% as an because all banks have because of the repo rate decrease, all banks have cut down their interest rates on their deposits. So this is also giving a good return, that is 2.5%, and the interest is paying semi-annually, and which is backed by the central government. So most of the people might see this is a very good bet to get into these gold sovereign bonds. And other characteristics we can, if we discuss, like it can be used as, if you want to take up the loans, it can be used as collateral. Gold bonds can keep it as collateral and can take for the loans, and you can convert into this demat account form, or you can make it liquidate also by this whenever it is trading on this secondary market. And the most important is the tax benefits what we do get on this. You don't get any TDS, like tax deducted at source will be on these interest whatever you have generated. And this can very easily can apply online, and you will get 50 rupees also as less whenever the people are who are buying online. So this is also one more way people the government wants to people to use more digitalized way of buying the gold sovereign bonds through online. Apart from that, you can go to directly to the designated banks and post offices and fill the application, and you will get the paper format or the issue of the certificate of the holding of the bond. And eligibility, so they have restricted the eligibility to the limited only the Indian residents and association trust and HUFs and minor who are backed by the guardians can only invest in this gold bonds. And apart from that, the purity is need not to worry, and everything will be cash settled. Either you can buy in the cash, and whenever you the maturity time is almost 8 years. After 8 years, whatever amount is there, whatever is the grams, how many grams you have bought it at that time, whatever is the market price will be multiplied with the grams at that market price on the redemption date or the maturity date that will be given. So everything will be cash settled. And it can be transferable also. The bonds can be transferred, and nomination facility is available, and premature withdrawal also is there. As we have discussed that there is a maturity period of 8 years, but there is a prematurity withdrawal can happen after 5 years also. So this is one more availability is there, and you can easily transfer it to others. But the tax, when it comes to the tax implications, we already explained that there is no TDS will be taken on these interest whatever you have got through SGB, and capital gains whatever you have got it, that will not attract any tax. But whenever you are transferring the bonds during that or before, or you done any withdrawal prematurely, then there can attract some long-term capital gains. After 3 years, if you does that will get some indexation benefits also. So these are all tax implications which are very good when compared to your bank FDs or other debt instruments. We see that when it comes to the tax impact, there is no tax on your TDS will be deducted, or there won't be any capital gains tax will be attracts to this investment. So finally, I'm concluding that apart from like we have started, the gold appetite is very much is there, and it is increasing day by day in the Indian markets. But we need to educate the people to that appetite towards holding the gold in the form of not physical form, but in the electronic form or the paper form. This is what we need to educate and spread this knowledge among the investors who are having gold appetite and who are having urge of gold, buying the gold as an investment. So this we can tell them, like they can hold up to 10 to 15% of their gold in their portfolios. Everyone should hold to hedge their risk, as we had seen COVID-19 risk. There are so many risks that might come into the period of during our lifetime. So to hedge our portfolios, one must hold the gold as an good hedging and as a risk management tool. Also we can add that. Thank you so much for giving me this opportunity for this giving the webinar on this gold outlook for the board and to the members of the gold and the people who have helped me to make this technical assistance. Thank you so much.